A 90-day pause for the people that didn't retaliate.
President Trump authorized a 90-day pause, announcing a complete pause on all reciprocal tariffs.
I always say tariffs is the most beautiful word to me in the dictionary.
In a stunning twist that has left both Wall Street and Main Street reeling, President Donald Trump has announced a 90-day pause on most of his newly imposed tariffs, sparking a massive stock market rally. But with China still facing a steep 125% tariff, questions abound. Is this a calculated negotiation tactic or a dangerous game of economic brinkmanship? And more provocatively, did the president's timing and social media posts cross ethical lines, veering into market manipulation? On April 2, 2025, President Trump declared Liberation Day, unveiling a sweeping 10% tariff on all imports, with higher rates targeting specific countries, including a 125% tariff on Chinese goods. The immediate aftermath saw global markets plunge, with the S&P 500 dropping 6.65% and the Dow Jones falling nearly 4%. Investors scrambled as fears of a trade war-induced recession loomed large. However, just a week later, on April 9th, Trump abruptly announced a 90-day suspension of these tariffs for all countries except China, citing diplomatic outreach and market volatility as key factors in his decision. The markets responded with euphoria. The S&P 500 surged nearly 10%, the Nasdaq jumped over 12%, and the Dow Jones soared by 7.9%, marking its largest one-day points gain ever. Market volatility and economic impact. The initial tariff announcement triggered a historic market downturn, with over $6.6 trillion wiped out in just 2 days. Consumer confidence plummeted, and fears of a recession intensified. The subsequent pause led to a dramatic rebound, but analysts warn that the underlying economic instability remains. Former Treasury Secretary Janet Yellen criticized the tariffs as the worst self-inflicted wound on a strong economy. Political reactions and ethical concerns. The timing of Trump's tariff pause raised eyebrows, especially after he posted on Truth Social encouraging investors to buy stocks, signing off with DJT, the ticker symbol for his media company. Democratic lawmakers, including Senator Adam Schiff, have called for investigations into potential insider trading and market manipulation. Critics argue that the president's actions may have crossed ethical lines, leveraging policy decisions for personal or political gain. China's retaliation and ongoing trade tensions. Despite the tariff pause for most countries, China's imports still face a 125% tariff, prompting Beijing to retaliate with an 84% tariff on U.S. goods. The escalating trade war between the two economic giants continues to unsettle global markets and supply chains. Analysts caution that the temporary relief may be short-lived if a comprehensive trade agreement isn't reached within the 90-day window. President Trump's abrupt policy reversal underscores the volatility and unpredictability of his administration's economic strategies. While the tariff pause provided temporary market relief, it also highlighted the fragility of investor confidence and the potential for policy decisions to be influenced by market reactions. The ethical implications of the president's social media activity, particularly in the context of significant policy shifts, raise serious concerns about the potential for market manipulation. If investigations reveal that insider information was leveraged for personal or political gain, it could have profound consequences for public trust and the integrity of financial markets. Moreover, the ongoing trade tensions with China and the looming threat of reinstated tariffs after the 90-day pause add layers of uncertainty to an already volatile economic landscape. Businesses and consumers alike may face continued instability, with potential impacts on prices, supply chains, and overall economic growth. President Trump's 90-day tariff pause has momentarily calmed turbulent markets, but the underlying issues of trade tensions, economic instability, and ethical governance remain unresolved. As the countdown to the end of the pause begins, the world watches closely. Will this period lead to meaningful trade agreements, or is it merely a brief respite before further economic upheaval? What are your thoughts on the president's tariff strategy and its impact on the economy? Do you believe the actions taken were in the nation's best interest, or do they reflect deeper issues of governance and ethics?
Donald Trump are imposing an even higher tariff of 125% on China.
China is striking back. Retaliatory tariffs on all U.S. goods by an additional 50%.
84%.
A shockwave just ripped through global markets. Donald Trump has dropped a bombshell, a 145% tariff on Chinese imports. In retaliation, China isn't just sitting back. they're hitting back hard. The yuan just plunged to its lowest level since 2007. Is this the final round in the US-China trade war, or the start of something far worse? As of April 9, 2025, Donald Trump escalated his economic war with China, announcing a sweeping increase in tariffs, raising duties on Chinese imports from 100% to a jaw-dropping 145%. Other countries were granted a 90-day delay. China, no such luck. Trump justified the move by accusing Beijing of economic aggression and currency manipulation, blaming China for intentionally weakening the yuan to prop up its export power. China's response? Swift and punishing. They fired back with their own tariffs, up to 84% on U.S. goods. The message was clear. They won't be bullied. But now, the question looms. Can either side afford this economic warfare? The yuan is collapsing. Onshore yuan closed at 7.3498 per dollar, its lowest in over 17 years. Offshore yuan plunged even further, hitting 7.4288 before a slight rebound. These aren't just numbers, they're warning signs. China's central bank is scrambling to maintain control, directing state-owned banks to limit dollar purchases and setting the daily midpoint far stronger than expected at 7th on 2066. But markets are clearly testing the limits. Meanwhile, Wall Street is caught in a whipsaw. Some investors saw Trump's 90-day tariff pause for other nations as a signal that diplomacy isn't off the table. The Dow briefly surged. But with China's retaliation, any hopes for de-escalation quickly vanished. And here's the economic gut punch. Economists now say that if this continues, Chinese exports to the U.S. could be halved. Half. That would knock 1 to 1.5 percentage points off China's GDP, an enormous hit to the world's second-largest economy. But Trump's administration believes it's finally got the upper hand. Their gamble? That China's weakened yuan, struggling economy, and mounting debt will force them to negotiate. Trump is betting that financial pressure will break Beijing. But this isn't just a trade war. This is a global financial confrontation. If China allows the yuan to keep falling, it risks triggering a global currency war, where other nations devalue their currencies to stay competitive. That could cause capital flight, market panic, and potentially another global recession. And here's the twist. Some analysts say Trump may have timed this perfectly. According to Bridgewater's Ray Dalio, China might now be cornered into making a deal. He suggested that China could stabilize the yuan by selling U.S. dollar reserves while stimulating its economy internally. In that scenario, the U.S. could walk away with a stronger dollar, a better trade balance, and a major political victory, just in time for Trump's 2026 campaign. But it's a high-stakes bluff. If China resists, the fallout could be catastrophic. Disrupted supply chains, spooked markets, rising consumer prices, and mounting global tensions. And let's not forget, China still holds over $800 billion in U.S. Treasury bonds. They haven't played all their cards. Trump's critics argue this could backfire. The yuan's collapse could destabilize developing markets and drag down U.S. exporters. And while tariffs might hurt Chinese manufacturers, American consumers and farmers are already feeling the pinch. So here we are, two economic titans locked in a showdown with global consequences. Will Trump's hardball strategy force China to bend? Or are we watching the slow-motion rupture of the global trade system? What do you think? Smart leverage or reckless gamble? Are we heading toward a new deal or the next global crisis? Let us know in the comments. And if you want to stay ahead of the chaos,
deals back in the shadows are all going on at the same time as well. Is that just outright market manipulation? It should be an independent investigation.
Or whether the president manipulated the market.
The markets are in chaos. Tariffs are skyrocketing. And now accusations are flying from the halls of Congress to Wall Street. On April 10, 2025, Massachusetts lawmakers launched a bombshell demand. A full, independent investigation into Donald Trump's latest tariff flip-flop. But what are they really alleging? And what's at stake for the American people? Is this tough-on-China policy or blatant market manipulation? On Wednesday, President Trump announced sweeping new tariffs on Chinese goods, reportedly, you heard 25%. But within 24 hours, the White House issued a stunning clarification. The actual tariff rate would be 145%. Investors were rattled. Wall Street took a dive. And despite a better-than-expected inflation report, even the bond market got hit by the aftershock. The abrupt shift raised more than eyebrows. It raised suspicions. And now, top lawmakers from Massachusetts are asking whether this wasn't just economic policy, but a deliberate ploy to influence the markets. As of April 10th, Trump defended his move, acknowledging, quote, "There will be a transition cost and transition problems. But in the end, it's going to be a beautiful thing." But critics aren't buying the optimism. Here's what we know. The announcement of the tariffs on Wednesday immediately sent shockwaves through financial markets. But it was the correction, the jump from 125% to 145%, that triggered outrage on Capitol Hill. Senator Elizabeth Warren did not mince words. "Is that just outright market manipulation occurring right in front of us?" she asked. "How many side deals, backroom deals, deals back in the shadows are all going on at the same time?" Representative Catherine Clark echoed those concerns. When asked by WBUR whether Trump may have manipulated the markets, she responded, "I sure think that is a real possibility." Let that sink in. Sitting members of Congress are openly questioning whether the President of the United States used his office to toy with global markets, for political gain, or worse, for private benefit. This isn't just a partisan jab. Both Warren and Clark emphasized the need for a nonpartisan, independent investigation. It should not be an investigation by Democrats or Republicans, Warren insisted. It should be an independent investigation. And here's why that distinction matters. If true, this isn't just a political scandal. It could be a violation of federal laws governing securities, insider trading, and executive power. The stakes of this moment are enormous, not just for Trump, but for U.S. credibility abroad. First, there's the economic fallout. Raising tariffs to 145% on Chinese imports could cost the average American household over $4,700 this year alone, according to some estimates. That's not a policy shift. It's a financial gut punch to working families. Second, there's the global reaction. China has yet to formally respond, but economists warn that retaliatory tariffs could be swift and severe. With inflation only just beginning to cool, a tit-for-tat trade war could reignite price hikes across critical sectors: food, fuel, and medicine. A third and perhaps most disturbing is the erosion of trust. If lawmakers are correct, and Trump intentionally misled the public, first lowballing the tariff rate, then unleashing the true number for maximum market impact, we're looking at a profound abuse of power. Why announce 125% if the real number was 145%? Was it to cause confusion, to profit off volatility, or to create a media storm that drowns out deeper investigations? We don't know, but Congress wants answers, and so should every American. This isn't just about tariffs. This is about power, transparency, and accountability in the world's largest economy. Did Trump just test the limits of executive authority? Or did he cross the line into economic manipulation? As of now, there's no formal investigation, no subpoenas, no hearings. But the calls are growing louder, and the markets are watching closely. Do you believe there should be an independent probe into Trump's tariff actions? Or is this just political theater during an election year?
US tariffs against China add up to 145%, including the existing 20% tariff. The S&P 500 down 4.2%, and the Nasdaq is down 5%.
The world's largest economy is teetering on the edge of chaos. In an unprecedented move, President Donald Trump has imposed a staggering 145% tariff on Chinese imports, igniting fears of a global economic meltdown. As markets tumble and alliances fracture, one question looms large. Is this the beginning of a new era of economic warfare? Since his first term, President Trump has wielded tariffs as a political weapon to confront what he calls decades of unfair trade with China. He argues that Beijing has manipulated trade rules, flooded the U.S. with cheap goods, and systematically blocked access to its own markets. This belief has fueled a relentless campaign to rebalance the U.S.-China trade relationship, culminating in this dramatic 145% tariff on a wide range of Chinese products. For years, the U.S. and China have maintained a tense but functional economic relationship. But friction over intellectual property, industrial policy, and trade imbalances has long cast a shadow. Now, with this new round of sweeping tariffs, the relationship may be entering a point of no return. 1. Economic shock waves. The announcement immediately rocked global markets. Wall Street took a major hit. By midday, the Dow Jones had dropped over 600 points, with similar losses on the Nasdaq and S&P 500. Investors are now bracing for a prolonged standoff that could disrupt supply chains and increase costs for American companies and consumers alike. 2. Global repercussions. U.S. allies are scrambling to understand the implications. European Union officials expressed deep concern about what they called escalatory tactics, warning it could undermine global trade norms. South Korea and Japan, both close U.S. partners and major exporters to China, are worried about getting caught in the economic crossfire. Beijing, in retaliation, slapped new tariffs on $50 billion worth of American goods, including agricultural products and semiconductors, intensifying the confrontation. 3. Domestic fallout. At home, businesses are already feeling the pinch. Retailers warn that prices for everything from clothing to electronics could surge in the coming months. The National Retail Federation issued a statement warning that American consumers will pay the price for this trade war. Meanwhile, manufacturers who rely on Chinese components are reconsidering their sourcing strategies or preparing to pass rising costs down the supply chain. This is more than just a fight over trade deficits. It's a high-stakes power play. Trump's administration is betting that economic pain on both sides will force China to the negotiating table under U.S. terms. But economists warn that this approach is risky and could easily backfire. There's also a broader message here. America is done playing by the old rules. The White House is positioning this as part of a larger realignment, reasserting American sovereignty in global markets and rejecting multilateral constraints. But such a hardline stance could alienate longtime allies and spark wider instability, especially as global economies remain vulnerable post-pandemic. Timing is everything. Economic anxieties mounting, Trump's latest tariffs could become a defining issue. Supporters hail it as bold leadership in defense of U.S. jobs and industries. Critics see it as reckless brinkmanship that risks economic harm to millions. And what about China? Far from backing down, Beijing appears ready to dig in for a long fight. State media has framed Trump's tariffs as economic bullying, while officials vow firm countermeasures. This signals not just a trade war, but a broader strategic rivalry between the world's two largest economies. As the dust settles, one thing is certain: the economic balance of power is shifting, and not quietly. Trump's 145% tariff is a thunderclap across global markets, signaling a new phase in the U.S.-China rivalry. But is it a path to greater American strength, or a plunge into prolonged economic conflict? What do you think? Is this a bold move to protect American interests, or a dangerous gamble with global consequences? Hit that subscribe button now. We're just getting started.